we expect that the European fleet market will be quite stable, but to be very honest, I'm a little bit conservative. I think it could be better. And the growth will come from the emerging markets, knowing that in these days we have some trouble, we have some political issues in Russia, we have some issues with currencies in some markets like Argentina, in Russia and in Turkey. But I think this is just for a couple of months, 2 or 3 months, and then versus the end of the year, the emerging markets, they will pull up the fleet market worldwide with a hopefully slightly increasing European fleet market.
The fleet business tend to be more stable compared to the private client, which suffer more about the economy. So my expectation is that the channel will go through a slow recovery towards a better presence.
We expect a rebound of the fleet TIV already on general of the industry, especially in the markets that were suffering a lot on the last years, especially Southern Europe. So we're expecting keeping strong, or to keep strong in Nordic markets and UK, and to rebound in Spain, for example, Greece, to become more or less stable Germany, France, and to keep growing back to growth in Russia, which is an important market for us.
We think that the bottom line has reached in most of the countries if you're looking to the south. So we are quite optimistic that this year will give us a smart growth, especially in Audi corporate sales.
Last year was a little bit declining, but we expect a recovery because, of course, the crisis has to finish, and we are already looking in January and February the first positive results. In terms of set sales, last year we grew a lot, 45% in the Euro 5 markets. Also, January and February is continuing this positive trend, mainly thanks to the new products and especially for the new Leon.
2014 really is an extension of 2013. We've had a great success through 2013 with now nearly 40% of all sales going through the corporate channel. I think we'll see continued growth in terms of volume, maybe more reserved than this last year, but we'll still see an increase.
I strongly believe the fleet market will grow, will be stable this year, and for our expectation, I mean, we enter like a, really we are new for this product, but we see that there is big attention from company.
We see quite some differences in Europe at the moment. So whilst the overall European market is showing some slight improvement year on year, there's a lot of variation within that. So for example, Russia and Turkey remain a little bit challenging this year, but we're seeing some good recovery in some other markets in Western Europe. And fleet is obviously an integral part of that. Now, in terms of the commercial vehicle market, we find that as we come out of a recession period, the commercial vehicles generally lead the way.
The fleet market for 2014, we see it increasing. And we have already observed that January was very good in terms of new tenders compared to last year. And then we have already reached, at the end of February, 13% market share, which is not the B2B market share, but totally market share, B2C and B2B for PSA, which is a great result for us at the end of February. And we have already observed a certain increase of the tenders, the number of tenders that we have treated in January compared to last year.
I think we'll continue to see growth in Europe. I think the recovery in Europe is exciting. And I mean, the predictions of that are sort of ranging from 2% up to 5% growth at the moment. And I'd certainly see our aspirations in Europe being at the higher end of that range. So yeah, we're seeing the European markets come back in a number of key countries, and also we expect the fleet market to be growing actually ahead of the overall market in those two.
The year 2013 was not so positive in terms of development of the fleet market, so we believe that market will be back and it will grow, and I'm confident that we will remain number one. We have a market share in fleet in Europe around 30%, and we will be doing our best to again convince our customers.
We've got reason to be careful about optimism, but I think we can be optimistic. We can see business picking up also in markets like Spain, for example, which is very important. We've got markets in Western Europe where we can see that fleet demand is pretty stable. We've got great aspirations, not only on the passenger car side, but also on the commercial vehicle side. The transit family is growing. We've got 4 different transit vehicle models. and we will be providing mobility solutions and transportation solutions to our customers.
I think overall we see that the financial market is quite stable. I think recession is under control, and of course consumer confidence is up. So we believe that 2014 is going to be slightly up versus 2013. Now for Toyota, last year has been the third year of consecutive growth, and we plan to do exactly the same thing in 2014. And of course our key advantage is we've got now a full lineup of hybrids.
Last year we did 339,000 cars. We believe this year we can do 360,000. We are still, it's fair to say, probably still a retail, a private driven brand. 61% of our sales came in private versus the industry average of 48%. And we see fleet as a good opportunity for us to grow.